JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 7th of 20th. So yep, welcome everyone. Welcome to this Tuesday's morning live session of the 7th of July 2020. Yep, where we're gonna have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which, let me bear with me one moment, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now yep, there we go, right here, and yep, it will take you to this page which I believe you can find useful. Now then, quick update on what's happening here globally. And so globally, in terms of the coronavirus, now the numbers have the daily numbers have eased off a little bit, but still they remain on the high side. I mean, looking at the overall picture, you can see that yes, we are probably unfortunately that we're going to be hitting the 12 million mark by the end of this week if the same pace kind of continues, which, to be honest, for now it seems that it could do. Now this source is kind of telling us that the current total amount of confirmed cases is around 11,600,000, and the other sources tell us that there's already 11,700,000 and something thousand. So yeah, basically keep your eyes on this, keep your eyes on the numbers of the country wherever you are, and the most important, of course, guys, stay safe. Now jumping into the charts, the first one I want to touch on here is the Shanghai Composite. Now I talked about this one yesterday, basically, because this one is popping nicely to the upside, as you can see. And today, for example, the index managed to overcome this key important resistance where yesterday it got halted, and that level marks the high of the 26th of February 2018 and also the highest point of March. So the index kind of overshot this area nicely and continued to drift higher, and today, for example, it found resistance near the, let me just quickly capture this one. It found resistance near the 3,407 territory, roughly around there, and so even though the kind of the gains here are quite decent, as you can see right now from the technical side, it seems that the index could be forming a possible doji, and we still have about 50 minutes left of trading here on the Shanghai Composite. So let's see how this daily candle will shape up and close at the end of the well, end up being at the end of the closing bell. But in a way, given that it could be could be seen as a possible maybe reversal signal. However, again, we cannot really talk about that now. For us, probably the downside here, the downside scenario could come after a drop back below the 3,336 territory here, the one that I talked about yesterday, and the one that I just mentioned right now. and then yes, maybe we could consider a bit of declines here. However, don't forget that still this move lower could be seen as a temporary correction, because don't get me wrong, that still the index remains above this upside support line taken from the low of the 19th of March, and in a way it could drift a little bit lower here and test one of these levels, like for example the 3,288 zone, or a little bit lower. Now previously, if you remember, well, previously yesterday, if you remember, I drawn a Fibonacci here, but again, as you can see, it kind of continued to rally. So let's say if this has been the high now, then yep, if we could draw the Fibonacci this way, then yep, the 23.6% could come near the highest point of 2019. So this is quite interesting, and in a way could be a possible target. However, again, like I said, for now we cannot really talk about anything here yet, because we want to see then how tomorrow's trading activity is gonna shape up. Because if this continues to rally, then yep, forget about this Fibonacci. I mean, we'll have to just search for a new resistance level. But if this index starts dropping back below the 3,336 territory, the one that I mentioned, then yes, we could consider a possible slide towards the 23.6% retracement on the Fibonacci, which is roughly near the 3,288 territory, which is, by the way, the highest point of 2019. Or we could consider a further decline. But again, this move lower could still be seen as a temporary correction before another leg of buying, so be very careful with that. Now jumping into Nikkei, quick update here. So although Chinese equities are exploding to the upside, here basically the story is that Nikkei is kind of a laggard a little bit here in the Asian world. So among other Asian indices. So here basically the problem is that it's currently finding resistance near these levels. Now, one of the levels that I talked about yesterday was this 22,614 22,624 level, but as you can see, it kind of drifted further north. It kind of found resistance not far from this level as well, so the 22,700 mark. And let me just probably capture this one. It basically failed to overcome the high of yesterday, which was at 22,734. So this of course kind of makes us a little bit cautious here with this index. Although don't get me wrong, the index still is trading above its downside resistance line, the short-term downside resistance line taken from the high of the 9th of June. So what we could do here is basically keep our eyes on the high of yesterday, and then yes, a nice good pop above it would confirm a forthcoming higher high. And we're not going to drag this one too much to the upside. We're just going to aim for the highest point of June first, near the 23,186 territory, roughly around here. And then yep, we could take it from there, because again, we'll be, like I said, we'll be very cautious right now here. And if we do get a nice push above the high of yesterday, then yes, higher levels could be met. The index is already closed, so I mean, we can see that the index is has closed in the negative zone for today. However, still it's just a small one. I mean, and that's why we could still consider this as a little small temporary correction. If the price starts suddenly falling back below this downside line and falls below the 21,970 territory, which is marked by the low of the 29th of June, then maybe yes, further declines could be possible. I mean, more sellers could be joining in here and potentially driving this one towards the low of the 15th of June, near the 21,530 territory, a break of which, well, I mean, could set the stage for further declines, because this would also place the price below the 200-day EMA. Now, jumping into a few European indices here. Now, the German DAX yesterday closed in the positive territory, just because it opened with a nice gap here to the upside. However, it remained below this the highest point of June, near the 12,913 mark. Now, don't get me wrong, for now we're still somewhat positive on this one, and we're still kind of aiming for some higher levels. However, don't get me wrong, we'll be very careful at the same time, because ideally, looking at this technical picture right now, in order to aim for higher levels, probably we would like to wait for that push above this barrier, above the 12,913 zone, just because yesterday, for example, the rally, or actually the push higher, didn't really quite even reach this barrier, this June high, and the only way kind of how it seems like that the only way how DAX managed to gain here is that it opened nicely with the upside, with the gap to the upside here initially, and kind of then kind of the bulls managed to kind of keep it above the highs of last week, which were near here, near the 12,658 zone. If we look at the cash index right now, where it's currently balancing at, we can see that the price is currently moving at around 12,650 mark, which is basically below where it closed yesterday, and also below the high of last week. So this kind of could probably come in line with the idea of this little arrow here, where we could see maybe a bit of a correction. However, don't get me wrong, we have seen this many times where the index kind of let's say opened with the gap to the downside, and then we saw it kind of reversing and pushing to the upside. The only little problem here is, if we look at this daily chart, and if we're going to get a nice opening gap here below this area, below this the high of yesterday, last week, near the 12,658 zone, then we might be getting a possible island reversal, if I'm not mistaken. Here, let me just quickly double check. Yep, so it could be a possible island reversal here. Now again, don't get me wrong, I mean, this of course sometimes is seen as a bearish indication, and it is a bearish signal, but for now, I mean, it could drift lower here. It could move all the way towards this upside support line, taken from the low of the 19th of March. But if this upside line continues to provide decent support, then we could see another round of buying. So that's why, guys, at the moment, probably stay careful. Like I said, the upside, we will consider the upside further higher levels. We'll consider that after a break of the June high near the 12,913 zone, just to be on the safe side. But today we'll be very careful as well, because, as I said, today this index most likely is going to open lower here, below the high of last week, with causing a kind of a possible island reversal, which could be seen as a slightly bearish indication. But again, let's not rush into anything yet. First, let's see if it opens lower and continues to drift to the downside. If it does that, then still the bulls have a chance to step in somewhere near the this upside support line. Quick update on FTSE 100. FTSE climbed higher yesterday, managed to gain, but failed to move above this high of the 23rd of June near the 6,342 level. Today, this morning, the index is the cash index is trading near the 6,244 mark. So basically below where the price where it closed yesterday, but still above this the low of Friday here near the 6,137 zone. Now don't get me wrong, I mean, this is just one of those levels. I mean, it's not really a strong one to keep an eye on, because ideally maybe to aim for lower levels, we would prefer to start considering the downside maybe after a break of the 6,029 zone here, marked by the low 25th of June, or even better, the psychological 6,000 mark, and then maybe lower levels could be met. But again, for now, it's it's a little bit tricky here because the index is not really kind of that worse off. I would say it's still balancing above some of its key support levels, but yeah, we need some confirmation breaks, and the little correction that we're seeing right now in the cash index just could be seen as a temporary correction. So that's why I probably don't rush into anything yet, guys. And like I said, if you want to aim for higher levels, let's be on the safe side. Wait for, at least for a push above the 6,342 zone, and then consider the upside. Now, jumping into gold quickly here. So gold managed to rebound and kind of remain above this short-term upside support line that I kept talking about. Today the trading is kind of still above this upside line, so kind of everything's still working out nicely according to this arrow that I've drawn last week. And still for now our main target is the 1795-96 territory, which is the highest point of 2012. Slightly above that we do have the psychological 1800 level as well, which could also get tested. In terms of the downside, we need to see a drop below this 1748 zone in order to consider the downside. Now, jumping into the crypto world, so the FTSE the Ripple here managed to pop higher nicely to the upside yesterday. However, it still remained below this downside line taken from the high of the 30th of April, and today we're seeing a bit of a correction here to the downside. The most important is that the crypto here managed to remain above the 21-day EMA, shown here as the yellow line, which for some maybe buyers could be seen as a positive. However, as I've mentioned before, preferably we would wait for a break above this downside line, ideally a daily close as well, and then we could consider higher areas. And initially what we're going to aim for, if we do see such a break, then we'll aim for the 200-day EMA and maybe then the highest point of June near the 0.2152 mark, and then like I said, we'll take it from there. But in case this crypto starts dropping heavily to the downside here, and it drops below the 0.1743 territory here and closes the daily candle below it, then lower levels could be met. Now, jumping into a few pairs here, now AUDUSD. This morning we had the RBA interest rate decision. The rate remained the same. So not much, to be honest, activity here in AUDUSD, for example. I talked about this one yesterday. And basically, I was mentioning that keep your eyes on this little kind of resistance line here near the 0.6975 mark, because as you can see, it continues to provide decent resistance. Now, at the same time, don't get me wrong, the pair is still kind of on a small short-term uptrend, and this uptrend line is taken from the low of the 15th of June. So in a way, kind of as long as it can stays and trades above this upside line, there is still a chance for the buyers to step in, even if the pair, let's say, corrects a little bit lower right now. Around here we also have the 21-day EMA, which continues to provide decent support as well, as you can see on for example on the 30th of June, also on the 22nd of June, and on the 15th of June. So even if this pair, let's say, decides to reverse a little bit here and drifts lower, as long as it stays above this upside line, there is still a chance for the bulls to step in. However, the more comfortable level after a break of which we will consider higher levels is this 0.6975 mark. Now, quick update on the NZDCAD. Now, I talked about this pair last week. Basically, actually the week before that as well, because I was waiting for this break here of the 0.88 level, which we finally got last week, and the pair continued to rally and managed to hit our target near the 0.8890 level, which, as you can see right now, is acting as a very nice area of resistance. So that level, by the way, was the highest point of July 2019, and now this level will become the barrier that we're going to be keeping a close eye on, after a break of which the pair might drift further north. Of course, we do have some resistance levels here, but one of the probably better ones could be somewhere around here near the 0.8991 level marked near the highs of April 25th, 25th and sorry 26th and 29th or something around there basically. So good potential target, but we would need to see a nice good pop above this 0.8890 level first. In terms of the downside, now if this pair suddenly starts reversing sharply to the downside and falls back below the 0.88 territory, we may consider a possible test of this upside line. So basically, in other words, the move lower below this 0.88 territory would still be seen as a temporary correction, because we are still, as long as the rate remains above this upside line taken from the low of the 19th of March, still the main kind of scenario is to the upside. Now, if this upside line gets broken, then yep, further declines could be possible. Jumping into a few interesting ones. So the US dollar against the Russian ruble. I mean, I talked about this one a few weeks ago, and basically I was telling you guys to keep a close eye on this barrier. This is 70.61 territory, which got violated. It broke above, as you can see, and the pair continued to push north. It did correct a little bit lower, however, as you can see, this 100-day EMA provided decent support right here, from which kind of the pair reversed and pushed up again. So now it's aiming, we are aiming for this 72.63 level. I spoke about this one previously. So before it acted as a fantastic area of support, now it could take the role of resistance. So the 72.63 level, that's where we're going to be aiming for right now. Yep, let's see if it can stall here, and if it can, maybe we'll get a bit of a correction here to the downside. Jumping into USDJPY, so the pair here is, to be honest, stuck. Not much action happening here, to be honest, and it's probably maybe one of the boring ones right now, but still we're keeping a close eye on some of these levels, some of these potential breakout zones, after which, I mean, it could kind of drift further in the breakout direction. So if, for example, the pair does break above the high of last week near the 108.16 mark, this would also place the rate above the 200-day EMA here, and such a move could open door towards the highest point of June here near the 109.85 level. However, if the pair does struggle to move above this barrier and instead starts moving lower here, we will probably take a bit of a cautious and more conservative approach, because here we would consider the downside only after a break of the 105.94 level, because such a move would confirm a forthcoming lower low here, and yep, further declines could be possible. But until then, I mean, this level here, the 105.94, it could provide decent support, as it did here, for example, as it did on the 23rd of June, and also on the around the 6th of May. So yep, that's why we'll be very careful near this hurdle. But if that gets broken, then, as I said, this would confirm a forthcoming lower low. Now, another interesting pair, probably you don't look at very often. Now, this one's US dollar against this Chinese yuan, so the offshore Chinese yuan. And here, as you can see, yesterday the pair broke its upside support line taken from the low the 20th of January, and kind of also fell below the 200-day EMA. So now it's basically trading below all of its EMAs here, well, some probably bears could see this as a good opportunity to step in. Probably they will wait for the rate to kind of correct a little bit higher, somewhere maybe back towards this 200-day EMA, and then take charge again and attack the field. So again, for now, that's the kind of game plan. Let's see if this is gonna happen. For now, like I said, the pair today, right now, this morning, the pair is correcting a little bit to the upside, but if it struggles to get back above the 200-day EMA or this 7.04 level marked by the low of 10th of June, then or actually the lowest point of June as well, then yep, another round of selling could be possible, where we could then start aiming for the levels like, for example, here the 6.95 zone marked by the low the 13th of March, and yep, we would take it from thereafter. In terms of the upside for this one, well, I mean, of course, preferably we would like to see this one pushing back above this upside support line, and in addition to that, maybe a push above the this little high here, the high of the 15th of June, near the 7.0973 level, approximately around there. And then, yes, we could maybe aim for some upside. But I do understand we might be missing out on a bit of territory here, but we'd rather be safe than sorry. And finally, EURUSD. So the pair managed to stay perfectly above this downside line, the one that I kept mentioning about, this downside line taken from the high of the 10th of June, but at the same time it kind of failed to break even reach the 1.1353 zone, and as you can see today we're seeing a bit of a correction to the downside, so well, which is quite normal still. So but as I've mentioned before, as I mentioned previously, still let's wait for that push above the 1.1353 level in order to get excited about higher levels, because this is by the way, this is the high. It marks the highs of the 16th of June, and is also marked near the high of the 23rd of June. So yep, as you can see, yesterday it kind of came close to testing that area again, but failed to do so. So that's why we'd probably wait for that confirmation break above that level first, and then yep, aim for higher levels. In terms of the downside here, well, I mean, for now we'll probably keep the downside off the table, because still maybe the more ideal scenario for us is after a break of the 1.1168 zone, kind of to consider the downside, because such a move would confirm a forthcoming lower low. But I do understand that there is a bit of space that we could be missing out here, but let's see how this is going to play out today. For now, even if it drifts a little bit lower here, as long as it stays above this downside line, still there are some chances for the bulls to step in somewhere around here and push this one higher. However, as I said, to be a little bit more on the safe side, we would prefer to wait for a push above the 1.1353 level. So okay guys, I hope you found it useful, and thank you very much for watching and listening. And if you want to catch my video later on, my traders tea time is always 13:15 GMT. But for now, I hope you have a wonderful trading day, guys, and I'll see you later. Thank you very much, and bye-bye.